All right, everyone, welcome back to the channel. I'm joined by returning champion here, Shailesh from Simplify ETFs. He is a portfolio manager at Simplify ETFs. And today we're going to talk a little bit about SVOL, the 1 year, and we just passed the 1 year anniversary here of this great income oriented ETF. So I'll ask you a few questions about SVOL, but then I want to get into your new income oriented ETF. Hi, HIG. HIGH, right? Yeah, so very, very interesting. I'm always on the lookout for new income oriented ETFs. So, Sailesh, let's start with SVOL. So, we just, SVOL has been around for over a year now since the last time we spoke. How satisfied are you guys with the performance of the Simplify Volatility Income ETF so far? Any surprises, any challenges? What's your take or any lessons learned in the last year with this ETF? Tell me your thoughts.
I mean, investing is always a learning process, but we are quite satisfied with the performance, considering the tough market environment that we are in that investors are finding it challenging in the stock market as well as in the bond market. And short week strategies are one of the few strategies which are making money, but we know the short wicks can be a risky proposition. So the way we have constructed the portfolio in terms of hedging the extreme volatility scenarios, so in spite of hedging that risk, we are able to generate positive returns. So that is very satisfying.
Yeah, and I mean very consistent, right? So I'm talking to my audience here. In case you haven't seen my last SVOL video where we talk about it, SVOL is basically an ETF that shorts the VIX, and then you buy a protective call option in case there's crazy movement in the VIX. So it's a shorter term, and you just rinse and repeat this process every month. So you're basically monetizing the VIX, which is just the fear index. Right, Silas, do I have
Right.
that right?
Yes, and as you showed the VIX chart last time, then VIX usually remains range bound unless something like COVID or the financial crisis happens, then VIX, in your words, goes crazy. So for those
Yeah.
crazy environments, we buy insurance, so to say, but through options on VIX and VIX ETFs to protect the portfolio from that scenario and protect the returns from extreme volatility.
Yeah.
And in the normal markets, the way VIX happens is like VIX is a fear index,
Yeah.
as it is known, and technically volatility. And selling volatility is popularly kind of viewed as selling options, but selling volatility can be very different from selling options. In selling volatility, we sell VIX futures. We
Mhm.
maintain a short position in VIX futures, and the way the portfolio makes money is that because the term structure of the VIX, or that is expectation for the VIX for the future, typically trades at a higher price. So if you sell those features, and as the time goes by, those futures prices come down, and that's how the income is generated in this fund.
Yeah. So back a year ago, we were discussing this, and you guys are expecting, and this is exactly what SVOL has done in the last year. I found it I thought there would be a lot more fluctuation with SVOL's price, but it's actually been pretty stable. I mean, I think it started at about 25. This was during the bull market, so then it went to 28, then it went to something like 18, 19 with the 2022 volatility and crash, which is not so bad. And now it's starting to go back up to like 22. So it's a pretty stable ETF. But don't forget that I'm talking to my audience here. This is all about the income. So you have to count the income. So it's performed really, really well, solid distribution yield. And that's what I want to ask you next. So the last 7 monthly distributions of SVOL have all been a really nice, even 32 cents a share, which pretty much gives you between 16-17% yield, which is extremely high, extremely attractive in my view. So why has the distribution stabilized at 32 cents? Is it because you guys are kind of learn new tricks or learn to stabilize that distribution? Should we expect 32 cents a month going forward, or will it fluctuate
We have attempted to stabilize the distribution to
Okay.
avoid any large distribution, at the year end that could have a large tax impact, so to say. So
Okay.
so I know we can smoothen that out, and we believe that the distribution is varying 31 cents and 33 cents, something like that. There is value of some predictability of cash flow. So, this, the demand from the investor side is to have a predictable cash flow. And the
Yes.
way, like as we discussed, that in the long horizon, in the normal markets, when the stock market is growing at 5 to 10% kind of a rate, one would expect, this strategy to make around 15%. So, from the base price of starting price of 25, 32 cents would give a 15%,
Mhm.
yield. And, currently the price is lower, hence the yield is higher.
Yeah.
That's the way it works. And if the total return generated is more than 15%, more than 17% implied yield, then the price starts going up. So on an average, one should expect the daily price movements to go up and down with the market, but with a lower speed or lower risk. So our motto is basically, if we can deliver higher than market returns, stock market returns, total returns, income plus the price, and less than market risk, then that's the service we want to provide to the investors. That's the holy grail of investing, that
That
you
is,
have more than one market.
I was just thinking that's the holy grail. You wanna beat the market, the overall market, or the S&P 500, typically what people refer to, and with less volatility. So, uh, on behalf of the investors, I don't know. I'm speaking for myself and probably for a lot of people who are investing in SVOL. Thank you very much, because it's literally been a shining star in my portfolio. A consistent 15 to 17% yield, very, very consistent. I love the fact that now they're really stable at 32 cents a month. It's predictable cash flow, like you said. So all in all, I really, really love SVOL. Do you think the distribution yield will continuously going forward be approximately 15 to 18%, give or take? Do you think that's still going to be the case, let's say, when markets return to normal?
Yes, in fact, when the volatility goes down,
Mhm.
typically the term structure, as I mentioned earlier, actually goes steeper. So the yield could be much higher, but on an average, over long horizons, the normal expectations are 15%. However, there's potential for higher yield, given that we have figured out, the VIX positions are through futures, and we have
Yeah.
figured out that we can use treasuries as collateral, which generate extra yield. So
Which has been
there's
going up.
potential, right?
Which has
So
been going
like
up.
cash invested in treasuries or treasury bills can add to the yield. But we believe in keeping the expectations low and deliver higher rather than the other way around, so to
I
say,
like
right? So,
I like that. I like that.
right.
Yeah, yeah, yeah. That's good. It's true, because most of the ETF's money, even if you look on your website, you look at what's inside the ETF. Most of it is cash, right? And so now
Yeah,
that you from what I'm hearing, you're investing it in very safe government bonds, but because interest rates are going up, the yield on the cash that the ETF is holding is going up as well. So all in all, it's another good thing for SVOL.
right. So, we probably keep the distribution here for quite some time till the price goes over the issue price of 25. It goes significantly higher, then we probably, ramp up the distribution, so to say. So, as you mentioned, that when initially the fund was launched, the price went up, quite high, but at the time we did not have the distribution channel in place. So once the price gets significantly higher than 25, then that puts in accounting pressure, so to say, to increase the distribution.
Very, very interesting stuff. Very interesting ETF, one of a kind, the first of its kind. Really, really cool.
As,
One of my favorite positions, and will probably be one of my favorite positions going forward as well in my retirement account. So now I want to talk about your new ETF. You guys just launched a new income-oriented ETF called High, the Simplify Enhanced Income ETF. So whenever I hear income, whenever I see an ETF named that way, I'm always going to be interested. So tell me about this ETF, Sailesh. What's the premise behind it? What gave you the idea?
Well, there are two, three, I would say two main ideas that I want to, touch upon. Firstly, like we mentioned for SVOL, it is, the design is to, at least the objective is to deliver more than market returns with less than market volatility or market risk. The high is, sort of gunning for the bond market or the high yield bond market. So that's where the name high comes in. You get if you can generate high income without the risks associated with the junk bond, so to say. So then, that is the goal that we can deliver, treasuries plus 5%, something, like high yield bonds give, but without the default risk of a high yield bond. So that is the goal. So deliver better than the bond market yield with less than bond market risk. So, that is a goal, for that strategy.
Okay, so what does the ETF do? What do you do for high? I read that this is a collared option strategy, which is a pretty simple and easy strategy to understand. You're selling a call option on an index, and then you're buying a protective call option a bit more out of the money to protect that. Correct me if I'm
Right.
wrong there.
Right. So the concept here is, you don't want to sell naked options that you have unlimited downside, or sort of, that's what a corporate bond could be, that you could have a default risk. But if you're selling capped variance, as the technical term may be, then you're basically taking advantage of the volatility in the market is priced higher than the fair value. So it's by selling options, one can, generate a high yield, kind of income, eliminating the default risk. And that's what those, long option positions, do. So,
Okay, and
effectively,
oh, go ahead.
like, so in all these income strategies, as I was, mentioning, the complicated part is, there is a lot of path dependencies in traditional covered call strategies, even VIX strategies. Like, for example, like we talked about SVOL, what can be a challenging environment for SVOL would be a bear market when the, VIX goes up. If it goes up and stays at, say, 30, then the term structure is flat. You're not getting much roll down in the futures market. But that would be in perfect environment for a strategy, like, for when the VIX is high, you sell options, you get a, high premium. So
Right.
that would be a perfect environment, for a high strategy. So, the high ETF strategy, by selling options. So, these are various tools which can be made available to the investor. And a passive investor should have a diversified position, across these strategies, and that would eliminate the luck factor in the market or the path dependency. And I like to give an example, how a path dependency can affect the return of a passive income. Like, investors are very familiar with the covered calls, right?
Right.
So, like, covered calls, typically options roll, in the middle of the month, and the covered call strategies does the best when the market is sideways and you just keep
Yeah.
collecting the premium. However, that sideways market, when the market turns, can have a critical impact on the total, return for a covered call. That, for example, if the market is going up 5% up and down every month, a covered call can just, keep collecting their premium. However, if the turn of the market is coincides with the option roll, then you lose 5% when you don't make the 5%,
Yeah.
right? So, like, so that luck factor can be eliminated by diversifying across these various strategies.
Right, because your classic covered call solutions, and that's what mostly I'm invested in, typically underperform when the market goes up consistently over time. But like you said, the flat market is the best time for this. So for those strategies. So the first distribution for high was declared. The yield was only about 3.3%. Is that because it's the first one and you started in the middle of the month or something? So my question is, what kind of level of yield would an investor expect from this new high ETF?
Right.
Approximately.
So, right. So again, the cash is invested in treasuries or short-term bonds. So that should generate around 3-4%. And the target for the fund is to generate additional 5% through options. So, like if the short-term bonds are 3 or 4%, adding 5% to that, so 8-9% would be the should be the realistic expectation from the strategy in the current environment.
Okay, 8 to 9%. That seems pretty, very fair. Not as much as SVOL, but how would you compare it high to SVOL? SVOL is about 15%. High is about 8 to 9%. Would you consider high a less risky strategy or simply a good complementary strategy to SVOL?
Right. So they are definitely complementary in the sense that in certain environments, SVOL would be doing better, and in certain environments, high would be doing better. But as I mentioned, stock like SVOL risk should be compared with the stock market risk, and high risk in the high ETF, the risk should be compared with the high yield bonds. So high yield bonds on an average have lower volatility, than the stock market,
Yeah,
right?
of
So,
course, because they're
right,
bonds.
so they like stocks and bonds complement each other. Similarly, high and S1 complement each other, from
Okay.
a income investor point of view.
Okay, makes complete sense. So I read in the prospectus that you're for high, you could be doing the collared option approach on multiple indexes. So I think that in this first month I saw it was at the S&P 500, but you're saying we might even be able to do it on an aggregate bond fixed income. So what kind of indexes will you do these strategies on? Is it a set number of indexes, or you guys are always just consistently looking for the best and most lucrative and liquid indexes to do this options collared approach with high?
Right. So, usually they would be stock market indexes. And liquidity is a very important factor in selling options that, transaction costs, small amount of transaction cost can have a large impact, in selling option strategy. If you're buying option, you're looking for 10 times the payoff, even if you pay, 5% more for the option, it's not a big deal. But for when you're selling options, every cent matters, and that's where we need to focus towards the most liquid indexes. So that's why S&P becomes the main focus. However, we also check if there are opportunities available in the Nasdaq index or other liquid indexes. But given how the skew and the relative option prices, the long short options that we do, if it also depends where the long options are cheaper. So this is the relative basis of, at the money versus out of the money, technically, known as skew. So those considerations make S&P pretty much the dominating strategy. That's one should expect most of the time. But
Yeah.
we do keep an eye on opportunities in other markets as well.
Okay. Okay. Well, this was a great conversation. I know many of my viewers probably will not have understood everything that you've said. I myself love options. I think it's one of the key components, especially covered call options, but even this kind of stuff. It's one of the most key components in my income oriented strategy. And I'm talking to my audience here. Just because you don't understand everything, this is why I like for the professionals to manage this stuff. They know what they're doing. They're looking at options all the time and premiums. And one thing I really like about you guys ETFs, the management fees are pretty low. I mean, high I think is like zero point 0.5 MER, as well as maybe 0.6 or something like that. So these are, much less than your typical mutual fund or actively managed ETF. So, so if you guys are in the market, especially to my American friends and us Canadians who could invest in US securities in their retirement accounts without extra taxes, this is a great tool if you're an income oriented investor. So, Sailesh, thanks so much for coming on. Maybe we'll meet up in a year's time from now to do a 1 year aftermath of high. But the SVOL high, really, really cool income oriented ETFs. I strongly, suggest for you guys to keep making these cool income-oriented ETFs. They're really, really cool. My audience loves them. I certainly do. So, thanks again, my friend, and we'll talk soon.
Okay, thank you, Adriano. Always pleasure talking with you.
Take care. Hey, don't go yet. I have some important reminders, including some more recent ones, and I'll try to keep it as brief as possible. And for everything that I'm about to discuss, the links and info are in the video description below. So first of all, if you didn't know yet, I do offer a one-on-one coaching session where you'll have a 1-hour Zoom call with me where you could ask me all the questions you want, and I'll help you and assist you best I can. Just remember that I am not a licensed or registered financial advisor or planner. So to book a session, go on my website, passiveincomeinvesting.ca, and right there on the homepage on the left hand side, there is a small video. Watch that video to know how to book a one-on-one properly with yours truly. Also on my website, you could purchase my digital product, the Ultimate DIY Investing Package, which is on version 4 right now. It comes with lifetime updates, so you only have to buy it once. And this is really a reference tool or a companion tool to help you build your own portfolio according to your needs and your objectives. It has lists of funds. It has sample portfolios for both Canadian investors and American investors. So make sure to check it out on my website. I actually created a video which shows the product from A to Z because I don't want you to spend money unless you know exactly what you're getting. So make sure to check that video out on my website. And don't take my word for how good it is. Check out the reviews. There's over 300 of them, and they are all 100% real reviews. So here's some more updated news or recent news. I am now on Blossom, a new investing app designed for investors. I've been using it for a few weeks now. I think it's really, really great. It has a really cool feature where users could actually add and share their portfolios and what they're buying and selling every day. So you could actually link your investing account so it's updated automatically on a daily basis. I recently added my own main portfolio so you could follow how my portfolio is doing live and what I buy every month. Really, really cool. It's like a mix of Facebook and Twitter, but specifically for investing. So get on your phone, click on the link in the video description below and download the app. It's 100% free, so you too could share your portfolio. Just remember to look for me and follow me. My username is Adrian, PII altogether. Also, I do have a referral link for Questrade, so you could get $50 worth of free stock purchases. This is the Canadian discount broker that I use and I recommend. Unlike Wealthsimple, the other popular discount broker in Canada, you could drip everything you want. It has all the stocks and it also has dual currency accounts. Very, very convenient if you're buying both Canadian stocks and American stocks. I have a Questrade video, by the way, which gives you a little tour of the features, so make sure to check that out. I also have a referral link for Passive. This is the portfolio tracking tool that I use to consolidate all our accounts to get a nice bird's eye view, so you can consolidate all the information together for easy tracking and stats as well. Also, our Facebook group, Passive Income Investing, is now an invite-only private group. So to join it, you need to click on the link in the video description below and give the group a like to get invited. So we take pride in making this one of the best investing Facebook groups out there with over 13,000 members. There's no scams, there's no spammers, and negative and doomsday people, we kick them out right away. Also, follow us on Instagram if you want a little bit more of our personal journey here in Panama. And lastly, just remember everyone, I am not a licensed or registered financial advisor. This channel is all about my personal investing journey and how I invest to generate high passive income from a diversified portfolio of high yield funds. It's for educational purposes only, so don't forget to do your own research and due diligence. And of course, stay safe everyone, stay healthy, and of course, stay passive. See you next time.